Let me ask you something. Why does this exact candlestick pattern sometimes work perfectly and sometimes it doesn't? Same candle, same textbook setup, just two totally different outcomes. Or most traders say it's random. It's not. Most candlesticks are just an illusion. In this video, I'm going to show you something you've probably never seen before. Something that goes directly against what most retail traders have thought when they first started trading. And it's just one single rule, okay? Just one that determines whether a candlestick works or whether sometimes it doesn't. And I'll tell you that rule in a minute. Now pay close attention. I'm going to tell you something that breaks every rule you learned in trading. You've been taught to look at the effect, and I want you to look at the cause instead. Let me explain. Most traders think that candlesticks move price. They argue about the wicks, the bodies, the shadows, whatever. And see, the thing is that candlesticks actually work. Okay, that's actually the point here. You can see it on a chart. Bullish engulfings like this, they work. They take out the low, they close above the high, and they absolutely work. Price actually moves the way the books say they should. But then you zoom out and you start seeing the same exact pattern. Getting stopped out here, getting stopped out here, another engulfing candle. Getting pretty much stopped out here, this is also another engulfing candle. So what's going on here? What changed? Because the candles did not. And that's the key. Candlesticks themselves don't move price. Now you can argue all you want, but candlesticks themselves do not move price. Orders do. And orders don't come from shapes on a chart, they come from information. Now I've been trading and studying both technicals and fundamentals for over a decade. And what I'm about to say goes against almost everything that retail traders are taught. Everyone pretty much out there says, don't trade the news, ignore the fundamentals, news is noise. Perfect. Let me show you with facts why that's completely wrong. Here's how I see it. A candlestick is a footprint. There's no question about that. I agree. A candlestick is a footprint, but not all footprints are the same. So a footprint only matters when it's actually the big animal, so to speak, that made it. We call this a fundamental catalyst. Here's the truth. A candlestick patterns only matters if it's aligned with a fundamental catalyst that justifies the order flow behind it. Let me say that again. Candlestick patterns only matters if a real catalyst caused it. Okay, if there's a real reason that justifies the formation of that candlestick. If behind the pattern that we see on the chart, there's actually is a catalyst, a real reason for this pattern to be formed, a reason for why the collectiveness had a reason to buy or sell in order to create this setup, then the pattern that we're seeing is a signal to actually worth paying attention to. Are you following me so far? Okay, pay attention here. Because if the catalyst, if the fundamental reason isn't there, well, most of the time, it's actually noise. And let me be very clear about what I mean by fundamental catalyst. I don't mean, a London session open, daily support, RSI divergence. These are all technicals, okay? I'm talking about information that changes the expectations or valuations like, high impact economic data, CPI, NFP, whatever, central banks' decisions and guidance, geopolitical developments. In short, something that gives big funds a reason, a real reason to act. That's when candlestick patterns becomes a real footprint, okay? If there's no new information, if there's no catalyst behind the price move, I don't really know what's going on. Make sense? The pattern can be just random. It could be a rebalancing flow. It could be, some orders going through that are not actually speculative in nature. We cannot always know if there's intent behind the price action we're seeing. If there's speculative intent behind the candlestick that we're seeing, we cannot do it just by looking at the chart. We know it when there is a real catalyst behind it. Now, follow me closely here, because you can turn this into a real strategy that you can apply immediately. First, let me define something properly, okay? For me, an engulfing candle is only valid when it first takes out the low or the high, depending on whether you're looking at a bullish or bearish engulfing. In this case, we're looking at a bullish engulfing candle. So first it takes out the low of the previous candle, and then it closes above the high of the previous candle. So it's a full engulfing, okay? Weekend close, full candle engulfment. That's the pattern. Now let's look at it in context. It's September 2025 in this example. It's European Central Bank decision day. They keep rates steady, signal no imminent cuts, slightly hawkish stuff, which is marginally bullish for the euro, but not a lot. But that's not actually the point here, because the point is on the daily chart, Euro USD prints a bullish engulfing, low taken and close above the high of the previous candle. The exact engulfing candle that I've explained to you, with the low of the previous candle being taken out and closing back above. So we're looking at a bullish engulfing, yes, but, and this is the whole point, it's not a random engulfing. On this day, European Central Bank and its interest rate decisions stayed on hold and projected a relatively neutral forward guidance with no further cuts expected. Nothing remarkably bullish euro, but when we pair it with the price action, we understand that there's something going on there. This candle here, this engulfing candle, formed because the European Central Bank decisions changed something for someone, for the collectiveness, maybe a couple of big players, we don't really know, but something happened there. That's institutional order flow, okay? That's intent. Now let me show you another example. Still September 2025, but this time it's Federal Reserve decision day. The Fed cuts interest rates, 25 basis points, but Powell frames it as a risk management cut, which the market interpreted as pretty much hawkish. It almost made everyone think that they were not going to cut rates much further. But again, that's not necessarily the point here. Now it's pretty useful to understand that that comment is actually hawkish, but in this case that's not the point here, because watch the chart. See that engulfing candle, bearish one in this case. We're looking at AUD USD here. Now same exact engulfing candle that I've just explained you, with the opposite side of the previous candle being taken and then the candle closing beyond the opposite side of the previous candle. Full engulfing here. So once again, we're looking at an engulfing candle, yes, but it's not random. It's not a random technical pattern coming out of nowhere for no reason. On this day, the Federal Reserve had its interest rate decisions and Powell painted a slightly hawkish picture. And so that candle, you guessed it, was actually a signal to pay close attention to. Now this is what I want you to take away. Retail traders have thought, if you see a pattern, take a trade. Well, that approach works sometimes. But most of the time, if you follow this, you're gonna be in a trade. Most of the times there's no real reason behind it. Sometimes you're gonna catch, the trade that actually has a fundamental catalyst behind it. You're not aware of that, but sometimes you're gonna catch it. But what about half the other times? You're gonna find yourself in a trade that has no real reason behind it. Instead, I want you to shift your mindset to this, okay? If I see a pattern, I wanna ask why. What's behind that pattern? What is the catalyst? Why did it form? Why the pattern shaped on the chart? Is there intent behind it, or is it just random? See, candlestick patterns are execution tools. They tell us that maybe something is happening, that maybe we need to pay attention to. But it's our task to understand what's going on and then take action on it. If it all aligns, okay? If the technicals, so what we see on the chart, aligns with what is going on behind the chart. Now let me show you something. If you've been trading for a bit, you know how much of a legend Stanley Druckenmiller is. He has a superb track record. That said, without much saying, listen to this.
When you're making an investment decision or a trading decision, how do you piece the two together? How much time do you spend looking at charts today?
Okay, so every night at about 4:30, I get 272 charts. They cover just about every group in the stock market, every commodity, every currency cross I'm interested in, every fixed income market around the world. And they're basically daily, weekly, and monthly. Daily is supposed to predict 8 to 20 days, weekly 8 to 20 weeks, and monthly 8 to 20 months. When I make an investment decision, it's usually, sometimes, believe it or not, the idea comes from the charts, but I will never invest just on a chart. But if I really like a fundamental thesis and the chart stinks, I won't do it. I always assume that the market may know something, and I've always had a great deal of respect for the market. So I'd say 75 to 80% of my ideas come from fundamental, and then they're verified by the chart. But I've also found ideas from the charts and then discovered the fundamentals.
So, in other words, whether you derive your idea from the fundamental or from the chart, it doesn't really matter, okay? What matters is that you then end up adding the missing bit to the idea. So if you see the chart setting up nicely, the missing bit is the fundamental, okay? If there's actually a real catalyst behind the chart that is actually shaping the chart to look that way. If there is, you gotta trade. If there isn't, just move to the next one, okay? Be ruthless here. Do not take a trade just for the sake of taking a trade because it looks good. Align everything up, okay? Fundamentals and technicals. I can tell you, and I'm not just talking random here, okay, with no backing. I'm not one of those trading educators here on YouTube that talks and tells you to do such and such, and you just have to believe him on his words, and then you waste time learning something that you actually end up realizing was just hype to get clicks and views and sales. We're doing something different here, okay, with a public verified MyFX book that you can check. I'm not only telling you that this works, I'm showing it to you. So if you like this approach, hit the like button so these videos can start to get pushed to more traders out there.